And a very warm welcome to HSBC India SME Summit in association with CNBC-TV18.com. I'm Shruti Mishra. This is the second chapter of an exclusive on-ground event bringing together industry bigwigs and thought leaders to deliberate on the future growth roadmap of Indian SMEs. Today's summit in the financial capital of Mumbai, we will focus on the crucial role digitization plays in empowering SMEs, innovate, rise, expand globally, and charter their growth story. The volatility of the new normal has challenged SMEs to rethink traditional ways of operating and compel them to innovate, and digital transformation has led the way for them by offering them new and prolific opportunities to participate in the global economy. Additionally, for SMEs to thrive in international markets, the recently launched Lean scheme comes as a big support for this sector. The scheme aims to reduce the manufacturing costs, improve quality of products used, and provide a roadmap to global competitiveness for them. Under the revamped scheme, the center's contribution will be 90% of the implementation cost for hand-holding and consultancy fees, as against 80% previously. However, with digitization and innovative initiatives bring new dimensions for SMEs, access to funds and credit continues to be one of the biggest deterrents for them. So at this very special event today, industry veterans and digital experts will explain ways in which SMEs can engage with technology solution providers and explore innovative financial products and policies that can ease SME financing and operations, helping them scale beyond borders. We now commence the evening with an insightful keynote address on powering SME growth. Our guest of honor today, Dr. Dinesh Kumar Khara, Chairman of State Bank of India, has often expressed how supporting SMEs is important and that access to credible cash flow of small and medium enterprises is the best way out to enable hassle-free loans, as it makes lending very easy. He believes digital innovation redefines industries and changes the way businesses function, and has ensured that digitization has become a strategic priority for the banking industry. With State Bank of India being a pioneer in SME financing in India, it has been playing a critical role in the overall growth and development of the SME sector. And under the able leadership of Mr. Khara, the State Bank of India might reach its goal of 4 trillion rupee loan book for the SME segment by March 2023, instead of the earlier timeline of March 2024 set by the bank. On that note, ladies and gentlemen, to learn and understand the role of digitization in shaping the SME's potential growth and how their trajectory can impact the economy in return, we invite Mr. Dinesh Kumar Khara to the stage. Ladies and gentlemen, a huge round of applause for our guest of honor.
Thank you, and very good evening to all of you. SME is something which is perhaps very close to the heart of any Indian banker, and more so a public sector banker who has seen the evolution of this economy all these years. It is but for SME that we have seen where we have reached as far as the Indian economy is concerned. It happens to be the most key sector of the economy and also one of the key engines of employment generation. And as at 2021, the share of MSME to our GDP stands at 26.38%, and the sector employed almost about 11 crore people. Post-pandemic, MSMEs have been the focal point of attention across countries. I've been asked to speak on the topic empowering Indian SMEs to embrace digital transformation efficiently and scale internationally. If we take the outbreak of the pandemic as the starting point, the current state of MSMEs in India has improved significantly. The outbreak of the pandemic and the subsequent normalization has resulted in a new normal for SMEs in India, and which have displayed a great resilience and have recovered considerably. SME sector has been an epitome of resilience, and recovery post-pandemic. In terms of the geographical spread, the top 5 COVID-infected states, Maharashtra, Karnataka, Andhra Pradesh, Tamil Nadu, and Uttar Pradesh, are also the states with large MSME clusters. Some of these states experienced a reverse migration in times of pandemic. SMEs engaged in manufacturing both intermediate and final products were affected because of lack of adequate cash flows. In recent times, the geopolitical tensions have also hit SMEs very badly, resulting into spiraling input cost pressures, affecting their viability or their competitiveness. Keeping these hardships in mind, the policy responses were tailored to address the emerging situations. The audience is largely aware of the measures taken under the Atmanirbhar Bharat. Just to highlight the major elements of the government policy package, which included fund of funds for infusing equity into micro, small and medium enterprises, collateral-free loans for standard MSMEs, provisioning of subordinate debt to those MSMEs which are classified as stressed or NPA. The Ministry of Corporate Affairs also increased the threshold limit to recognize the amount of default for initiation of insolvency proceedings. It was increased from 1 lakh to 1 crore to prevent MSMEs from being pushed into insolvency, especially in the wake of outbreak of COVID-19. Special insolvency resolution framework for MSME under Section 240A of the Code was also notified. The Union Government also extended the emergency credit line. Under the ECGLS, banks have already supported more than 1 crore MSMEs. And as of November 30th, 1.19 crore loans involving 71% or 3.58 trillion of 5 lakh of this 5 trillion ECLGS limit were sanctioned by the banks. We at State Bank of India have carried out an internal study which reveals that the ECLGS scheme has helped in boosting the credit flow to MSMEs and also restored the health of sector to a significant extent. As per our analysis, almost 15 lakh MSMEs accounts were saved due to ECLGS. In absolute term, MSME loans worth 2.2 trillion, which actually amounts to about 12% of the outstanding MSME credit, have been saved from slipping into NPA because of the ECLGS. The ECLGS scheme also saved the livelihood of more than 6.6 crore people engaged in the industry, directly and indirectly, as per our research. As regard the GNPAs of the MSME industries are concerned, the ratio dropped from about 13% in the pre-COVID stage to nearly 10% in the financial year 21, and now it stands at around 7% in 22. All these parameters speaks volumes in terms of the steady improvement in the financials of MSMEs since COVID-19 pandemic. It's quite contrary to the general perception and the belief at the material point of time, but it is nothing but the reflection of the resilience which is shown by this particular sector. Beginning July 20, the government notified the revised criteria for classification of MSMEs by shifting from investment in plant and machinery to investment and turnover criteria with no distinction between manufacturing and services. MSME units are now classified as medium if the turnover exceeds 250 crore. As per the RBI data, beginning financial year 22, there is evidence of MSME units getting bigger, with several units crossing the threshold limit of 250 crore turnover and turning into the mid-sized corporate in terms of the new definition of MSME. This reveals integration of the MSME unit with the larger value chain, as PLI activity is also getting the requisite momentum. As announced in the budget of 23-24, the Credit Guarantee Fund Trust for MSMEs is being revamped by way of infusion of another 9,000 crore in its corpus. As per our assessment, it will create additional collateral-free guaranteed credit to the extent of another 2 trillion with a reduced cost of credit. Numerous measures for ensuring ease of doing business, such as Udyam registration, inclusion of retail and wholesale traders as MSME with effect from July 21, and PSB loan 59 minutes portal have been launched to facilitate in principal approval of loans up to 5 crore to MSMEs without any human intervention. In the recent monetary policy also, there is very clear focus in terms of promoting the receivable financing for MSMEs by ensuring that the insurance companies and factoring companies are also permitted to participate on the TREDS platform. The Udyam portal deserves a special mention in the context as it endeavors to bring all the MSME units under this portal so that such units could avail all the benefits of the government support to MSMEs, as well as banks being able to register them for the priority sector classification. In a significant move, the government has recently launched Udyam Assist platform developed by SEDB to bring the informal micro enterprises into the formal ambit, which constitute around 99% of the MSMEs in the country, without any complex or complicated paperwork. The Udyam Assist platform will enable informal micro businesses who are not registered under GST to get a registration certificate from the government based on the information available with the banks or NBFCs. The introduction of this portal could usher in a significant benefit to the micro MSME units in the country. To set the context right, the number of GST registrations in India is about 1.40 crore, whereas the current MSME units registered under the Udyam certification has now touched 1.62 crores, indicating a significant traction in registration under the Udyam Assist platform created by SIDBI. Infusion of technology has been widely recognized as one of the many ways to make MSMEs competitive and widen their reach. The technology can be general purpose, such as 5G, or a specific technology tailored to the business of SME. For this purpose, various institutions have come out with technology upgradation program to assist MSMEs. Technology infusion can also be extended to financing SMEs, and we have already witnessed the PSB loan 59-minute portal as one of the examples. And similarly, TREDS also to address the receivable financing for MSMEs without any delay in payment is another such example which has made the life easier for the MSMEs. E-commerce platforms such as Open Network for Digital Commerce can bridge the divide and further enhance the reach of SMEs. Let me now elaborate on some of the future steps since the rollout of GST. Large sections of Indian economy have been formalized. However, the micro segment of MSME still operates in an informal sector, which is now being integrated through the UAP portal. Furthermore, due to their small-scale operations, MSMEs are not able to raise capital. They are also unable to take advantage of most of the government schemes, which are mostly based on the digital transformation and the digital infrastructure, and require beneficiaries to have some form of the digital identity and presence. With the implementation of the structural reforms like GST and the JAM Trinity, the informal units are, however, getting integrated with the mainstream in the recent years. We need to push and encourage these efforts even further. One of the most important hindrances in making SMEs competitive and scale up operation is the inertia in the technology adoption. They need to shed the inhibitions to adopt new technologies accept e-payments, and foster in-house innovation, which will help them manage their businesses digitally and compete globally. The Ministry of Micro and Small Enterprises has established technology centers which provide technological support to industries through design and manufacturing of tools, precision components, modes, etc., which are essentially the common facilitation centers. They have been created at various industrial estates across the country, and actually it encourages general engineering, forging and foundry, electronic, electrical, fragrance and flavor, glass, footwear and sports good. Depending upon the flavor of the local cluster, these kind of common facilitation centers have been set up. These schemes program inter alia include financial support, new thrust on manufacturing and export will also lead to the further push to the MSME sector. There is a definite effort on the part of the large corporates also to upgrade the MSMEs who are part of their vendor-distributor supply chain. Capacity building and training remains a very major challenge for the MSMEs. Comprehensive B2B portal msmemart.com is being operated by National Small Industries Corporation as a one-stop digital solution to all the business needs of MSMEs across all sectors and provide next-generation services to MSMEs to make them competitive in the global market. Industry associations dealing with SMEs must educate their members to avail these services to their advantage. The Self-Reliant India Fund has been set up by NSIC, and also the very purpose of this fund, it is more like a sponsor fund. It has been set up with the help of our SBI Cap Ventures and has been selected as they are actually selected as the investment manager of this fund. And this Shri Fund employs a fund of fund investment strategy, wherein the fund invests in the SEBI registered category 1 and category 2 alternate investment fund, which in turn invest in MSMEs. Since commencement of operation in October 21, till date, this fund has committed nearly 50% of its corpus and have also invested more than 3,600 crore by way of an equity in more than 280 MSMEs across the sectors. And this is very widespread across agriculture, climate, sustainability, defense, and pharma. RBI is also engaged in encouraging initiatives in areas such as MSME lending through its regulatory sandbox. Other stakeholders such as banks and fintech companies are also collaborating to provide digital credit delivery mechanism in a very cost-effective and hassle-free manner. One can hope that these initiatives will give some scalable options in future. Further, we have also observed that capacity building is being attempted of the first-time exporters. As you would have observed, manufacturing export is assuming greater significance, and there is a very sharp focus from the government to encourage the manufacturing export. And with that in mind, this is becoming capacity building for the first-time exporter is assuming much more relevance. It involves reimbursement for new micro and small enterprises who engage in exports, and also there are various kind of incentives are being offered to the first-time exporters. These exports could be, these concessions are in terms of export insurance premium and offering them the testing and the quality, which is very critical for encouraging exports from the country. These interventions assist the exporters in MSME sector to increase their access in the international market. In the recent years, we have covered considerable ground, yet there is a scope for integrating and synchronizing various measures being taken by different stakeholders across the economy. While concluding, I would like to say that MSME sector holds immense potential. The need is to have a right set of policies and enabling framework which guide and support MSME to effectively handle their existing problem and venture into the newer areas. While both the government and the RBI have introduced a plethora of measures for improving access to finance and to promote growth of the sector, the small size of the individual units and informal nature of the sector continues to pose challenges. We hope to overcome them through the bouquet of measures. At State Bank of India, we have already moved to cash flow-based assessment of credit requirement, and there has been tangible improvement in the credit quality. The major challenge for any banker is to have the credible information relating to the performance of the MSME. Thanks to availability of data from several sources, including GSTN, income tax, credit bureaus, it is now possible to appraise MSME loan proposals expeditiously by doing due diligence online. And that is one of the reasons why our effort in terms of offering online solutions to MSME are actually yielding results. Our account aggregator and open credit enablement network are enablers of cash flow-based lending. They help convert data into a utility which is being used by the banks, fintech to build cash flow-based lending products and enable underwriting of the same. RBI also introduced an account aggregator and public credit registry which benefit the cash flow-based lending. Account aggregator as an entity licensed by RBI works as an intermediary to the borrowers. It accesses the borrower's data from various financial institutions, structured, unstructured sources of information, and works like a consent broker. This empowers bank and BFCs to assess the borrowers and review the credit applications almost instantly. Given the fact that the MSME sector contributes significantly to export, it is essential that they should be integrated with the global value chains, where perhaps the quality holds the very important key. And that's why there is a sharper focus on encouraging MSMEs to pursue the goal of quality. To my mind, it's a unique opportunity for all the MSMEs because the way India is focusing on manufacturing and the way the ecosystem relating to vendor-distributor ecosystem is getting strengthened, it's going to unfold a huge opportunity for the MSME sector. Being part of the global value chain will, of course, enable MSMEs to produce quality goods and services which will have greater acceptability across the global market. It also becomes all the more relevant when we have started talking about India as a resilient supply chain partner. The major challenges of the sector to establish connect to the global value chain are essentially lack of information, knowledge of market, and ensuring adherence to the quality standards. In this regard, I see a greater role for cooperation among all the stakeholders. Lastly, a sound and stable macroeconomic base is the bedrock of healthy MSMEs. Macro policy needs to address the negative output gap that has set in since the COVID-19 pandemic, and in this respect, government and RBI needs to be complemented for a coordinated policy response since the pandemic outbreak. That has, in fact, remained elusive in most other countries. I take this opportunity to thank all of you for allowing me to express my view on this very important subject. Thank you very much.
Thank you, sir, for such an insightful keynote address and for explaining how Indian digitized SMEs can benefit the Indian economy and expand globally with innovative strategies and industry guidance. Moving on, it's now time for us to get on to our first conversation of the evening, where industry experts will basically decode the strategies to enable faster and seamless global expansion of SMEs. The speakers will also discuss the deterrents SMEs face and how they can surmount the challenges of credit access access, lack of human resources, and opportunities to build their network. I will now request our esteemed panelists to join me on stage. Ladies and gentlemen, please put your hands together for Shrivats Prabhakar Servify, Souvik Sengupta, co-founder of Inframarket, Amit Wagh, partner and leader for financial services consulting KPMG, and Naya Sagi, co-founder The Good Glam Group and CEO of The Good Community. Ladies and gentlemen, a huge round of applause for our first panel. Thank you so much, panelists, for joining us. And let me start with you, Shrivats, very quickly. You know, you've worked with large companies, Nokia, Tata, Samsung. You've managed a lot of SME partners, you know, there. And then you started your own SME business. As an entrepreneur, how, you know, yourself, how has the whole landscape transformed for you from then to now? How big a role has technology played, you know, in basically leading the growth for the sector and for you?
Sure. Thanks, everybody. I think it's great to be here. Yeah, when I used to work for Nokia, we used to work with a lot of SMEs, but I think there was still a lot of resistance, hesitation because of the quality or consistency, predictability. But I think it's definitely changed over the last decade, more so probably in the last few years. Technology has become definitely a big differentiator, and a lot of companies understand that they cannot do everything on their own. And as an entrepreneur, I can say Apple was our first customer. So you can imagine world's probably the largest company agreeing to work for an unknown company or work with an unknown company. I think people have become more open. SMEs definitely contribute to the overall success of large companies, and that's the reason SMEs are no more small and medium. They have to be smart and marvelous.
I like that.
Yeah.
Smart and marvelous.
Yeah.
Well done. All right. Souvik, let me now come to you. You know, I want to throw in some official data here. The number of Udyam registered MSMEs closed in the current financial year has nearly doubled from the last financial year's account. While there are many factors that have obviously led to this, do you think that trading internationally has kind of helped SMEs diversify and perhaps build resilience to future stocks?
So I think there are two parts to this. I think there's a global shift towards India, obviously. It's an India plus one N strategy to eventually become the global supply chain for the world. And Indian SMEs, either directly by supplying goods and services to global companies, or where they are supplying to people manufacturing in India for global. So we have a lot of OEMs, one of the largest OEMs of the world, setting up factories in India now under the PLI schemes, getting advantages there. And then obviously a large part of their input will come from Indian SMEs. So I think on both those fronts, the Indian SME is well positioned to sort of tap into this growth that is going to be led by this sort of a global shift to India. I think Indian SMEs are not only going to be very active in India, but you will see a lot of them essentially tapping and leading to the growth in a lot of other countries of Southeast Asia, other countries as well. Udyam registration, I think overall we've seen this country have digital adoption to a level where we can't see in most other countries. I mean, recently there was the banking crisis in the US. I personally know a lot of founders who had money stuck in one bank in US, had to shift to other banks. I mean, the convenience of an UPI,
yes,
the convenience of immediate credit, I mean, that is something developed economies have not been able to crack. I think those basic digital infrastructures that India is creating, from UPI to ONDC, the Gati Shakti scheme, I mean, the entire platform that eventually an SME and MSME can plug into can help them compete with the largest of global competitors.
Absolutely, Souvik, absolutely. And, you know, again, I would like to now go to Amit. Amit, KPMG published a report which said that, you know, neobanks are digital-only banks that are disrupting the banking system with their customer-centric digital offerings, you know, across retail, across SMEs, instant receipts, payment gateways. Do you think, and I know it is a yes, but, you know, if you could elaborate on how they can basically also lead the path for SMEs going global, how can they expand their growth?
Absolutely. So if we look from an India perspective, I would slightly expand that. You know, you've got neobanks. They're not true digital when you look from an India perspective. I mean, they're not digital banks per se, as you see globally, but neobanks along with fintechs, have been playing a significant role in disrupting. And we see a lot of collaboration between fintechs and banks when it comes to aspects of value chain. So we see, for example, on the trade side, on the remittances side, on credit side, of course, on the liability side. And these are mechanisms which enable or would enable easier access from a credit perspective to the MSMEs. And therefore, they become in some ways a vehicle for the MSMEs. Because if you look at MSMEs, 40% of them have access to what you call as proper credit, 60% struggle. Similarly, a lot of MSMEs struggle on providing collateral to banks. And therefore, as you sort of look at the digital ecosystem, cash flow or transaction-based lending starts becoming important. And the fintechs are using that ecosystem and alternate data sources which can be leveraged by bank. And therefore, that becomes a mechanism for credit flow or capital flow into the MSMEs, which is a very important thing when you look from a growth perspective, be it from a domestic perspective or be it expanding globally. So I think it's a very important aspect of the value chain that fintechs or neobanks would sort of play from an India perspective.
All right, great insights there. Naya, let me now come to you. As per a survey, over 66 lakh MSMEs registered on Udyam portal, 95% are micro enterprises, only 0.5% medium firms. How can digital tools, AI-backed solutions help them scale further and reach international markets? In fact, the Good Glam Group has operations in the Middle East. You've expanded globally. Share with us your learnings and, how easy or how challenging was it?
So, great question. I think we actually underestimate how easy it is sometimes to do business in India. I know we talk about how tough it is, but sometimes we underestimate how easy it is.
That's good to hear, that how easy it is.
And I'll tell you a couple of things that make life so much easier for us here. I mean, the unified tax regime, the GST. We underestimate how easy it makes for all of us to actually operate across multiple states, multiple contexts, for us to therefore then work with different sort of either revenue financing or sort of credit financing with a proper history across multiple contexts, right? If you look at the US, different states actually have different tax regimes. So when you're expanding the US, you actually have to invest heavily into getting an understanding of how to operate across these different geographies, different states, and basically get a unified perspective as to how the business is doing. So I think we miss some of the ease of doing business. The second piece to it is, of course, in India, everything, we leapfrogged, and we have a digital footprint in everything we do. Right from sort of our integrations from marketing automation to revenue-based financing, which plugs into a marketing automation, to basically our CRM tools, everything, to our logistics, supply chain, the IoT, everything has a digital footprint today, right? So for a business to operate in India, you can just take a very, very clear look, using BI, business intelligence, using your data visualization tools to see how is business doing on a real-time basis. So that is the ease of doing business in India. I think, however, internationally, the structures, I think the governments, for instance, in the Middle East, extremely progressive, very welcoming, very helpful tax regimes overall, right? And I think a very clear understanding that, with I think the SaaS tools that are being set up on especially things like chatbots, in terms of things like, supply chain optimization. There is and also, of course, with our marketplace partners, right? So, the existing partners that we have, have a global outreach, they make life much easier to sort of expand internationally as well. So I think pros and cons, but of course, I think as Indian founders today, we all have the aspiration to go global. So I think you take the cons over their worth.
All right. Naya, I don't know how much you'll be able to tell me, but I'm going to take my chances here. So Middle East, you've already set up operations. What new markets are you eyeing and how soon?
We can't comment on that, Shruti. We'll have a public announcement on that soon.
All right, okay. Srinivas, let me get back to you again. Your company, Servify, recently raised its Series D round of funding, and the whole idea was to, use the capital for international expansion. Talk to us about that journey, and, what have been the key learnings from it?
Sure. I think, first of all, I would definitely agree with Naya. I mean, it's so easy at times we feel to do business here because of the infrastructure, data, UPI, account aggregate frameworks, GST. I'll tell you an example. We started Europe about 3.5, 4 years ago. We took almost 14 months to get operational because ours is a slightly regulated business. We need to take insurance intermediary license, etc. So we applied, it got rejected. After 3 months, the rejection happened. And then they said, you need a person who has a principal license, only then you can apply. Obviously, we hired a person and applied. After 3 months, again rejection. And they said he needs to be on your payroll for minimum 6 months.
Okay.
So if somebody is talking about doing business, is difficult in India, I can tell you there are many countries which say that they are very easy, but that's not
It's
true.
really good to hear two founders saying that it's very easy to do business
I'm
in
not
India
joking.
now.
So, so that's one of the reasons you need to be adequately capitalized. If you are a small company trying to enter a large market, the uncertainties are very, very high. While we had a contract, we had a customer willing to start paying us, but we were not ready to do business. And it took about 14 months just to be compliant to start business, because that's the only time you can start signing contracts, right? So I think as a small and medium enterprise or any startup, because we are a startup, having capital on your back is always good, because you also have a lot of uncertainties. There is, unfortunately, there was COVID. So I think the reason why we raised capital is not just for international expansion, because we are today present in about 37 countries. But I think we want to, our aspirations are definitely to go to some newer countries like Japan and LATAM. So obviously that's one of the reasons, but also scale our product and get the right people, get the licenses. So we have a kind of 15-month cycle from setting up to revenue. So that's one of the reasons why we raised capital.
So what's the biggest lesson that you've learned? That it's easy here?
Many a times when you're small, you can take decisions. As you become medium, your decisions have to go through a cycle. And I think especially when you're going to an unknown territory, I think many a times your execution becomes a little slower. So I would say to SMEs, if they have ambitions to grow outside of the country globally, tread your markets carefully, because a lot of perceptions you have when you enter a market are not realities. The realities could be very different. I can tell you, Turkey, we could set up the office in less than 7 days. In Saudi, we could set up office in 1 month. But in Europe, we took 14 months.
Okay. From 1 month to 14 months, that's quite a stark difference. Amit, let me come back to you. And Anaya mentioned how important is it to get your whole digital tools and that whole ecosystem in place if you're planning to expand globally. What I want to know from you is that how can adoption of these partnerships of the digital ecosystem enable MSMEs to accelerate their growth and improve, most importantly, their profitability?
Sure.
They have to be profitable at the end of the day.
Absolutely, because as much as we talk of the digital footprint, it's also disrupting a lot of value chains. A lot of industries, sub-industries, the value chains are getting disrupted. And therefore, whether you look globally or whether you look from an India perspective, getting embedded in those value chains become important. We see a number of digital platforms coming up. There's the initiative for the open network for digital commerce, right? All of this is going to accelerate the way business is getting done, right? Here in India, as well as you participate in global supply chains as they shift into India. And therefore, participating or building those partnerships, and building digital partnerships can at times be a little different if you're working in the traditional way where you have stockists and a distribution network or a supplier network, right? So I think that's going to be important, right? Also related to that aspect is when you get into the digital ecosystem, how do you then safeguard the data? Now this data could be related to your customers, it could be related to your organization. Aspects like cyber security start becoming very important, So adoption of technology and adoption and making sure that the data is protected as you get into the digital ecosystem becomes important. And these are aspects which are very critical as you forge partnerships in the digital ecosystem. So definitely, I think there is, the pivot is in that direction. That's how we see. It's also a great way to source, but you have to be careful. You also need to make sure your unit economics and profitability is working well when you look from a digital perspective. We've seen sometimes businesses struggle as they get into digital platforms because the economics don't work very well.
So let's go across to a business that has not struggled. Sovic Infra Market nearly saw a six-fold jump in its net profit in FY22. The company, you've scaled your business across product categories and of course geographies. You set up offices in Singapore and Dubai recently. How do you manage international competition while also, you're scaling at home? That is the big question. Your hands are full.
Yeah, I think as a startup, I think one of the best, one of the best qualities you can keep with your team is speed and eventually disruption. I think if you're, I think time is your greatest competition. You cannot decide that I'll do this 10 years down the line, because eventually that is the advantage you have over a legacy business, that you can actually make decisions quickly. You fail, but you fail fast. I think that is the most critical piece of the puzzle. I think for international expansion, I think we were well positioned in the entire macroeconomic situation, right? You had COVID, which first shifted supply chains. Then you had the geopolitical issues. And now you're suddenly seeing that India as a global manufacturing hub, we as a platform primarily work with SMEs and micro enterprises. They manufacture for us, we help them get international orders, we help them get an international order book. So expanding into the Middle East or expanding in Singapore for targeting Southeast Asian economies is what we need to do to get Indian SMEs shipping their products globally. And I think for us, essentially what we have seen is this thrust of manufacturing and the thrust of government initiative that is coming in, developing India as a manufacturing hub. Yeah. Not only as manufacturing, but around about the ecosystem around it, from payments to eventually transport, logistics, the entire network is essentially on the way to create the India as the next manufacturing hub of the world. So I think if Indian startups or platforms cannot go global right now, they will eventually miss the bus, which is going to come 2 to 3 years down the line. It's inevitable.
All right, it's inevitable. Shrivat's coming to you. You mentioned in one of your interviews that the future of customer experience and support is about deep empathy with a layer of automation. So did such a belief led to making strategic acquisitions? You've made quite a few. Do you believe that M&A is the route forward and will help SMEs, enable global expansion quicker?
Yeah, I think it's time to market. Therefore, you go for inorganic route of building those capabilities by probably acquiring few companies. But just to give an example of, if you do not have empathy, you should not be in customer business, right? Anything that touches customers' lives. Just an example, coming from a service background, I spent all my life in customer service. Imagine a customer calling your call center at 9 o'clock and saying, I have a problem. It could be a bank, it could be an electronic company, anybody. And somebody says, okay, try this. The customer goes back, tries for 2 hours, nothing happens. Then the customer calls back, maybe after 3 hours, and that's when a ticket gets registered. And then somebody works on the company side. The companies track the SLAs as the time, which probably is 12 o'clock when the customer reported the issue, which was tracked in the system, to let's say 2 hours, and they are very happy, 2 hours we solved the customer's problem. But the customer is actually having the problem from 11 o'clock or 10 o'clock, whenever he first interacted with you, but you have not kept a record of it. So I think as long as the companies understand that, look from the consumer's angle rather than what's convenient to us, I think you will not be able to deliver experience. That's what an Apple has done, that's what an Amazon has done, and so many others. And I can tell you, SBI chairman is here, SBI is one such bank. While we all had a perception, I can tell you personally my own experience, the bank manager is willing to wait for you with the office kept open at 7 in the night. Because we had some requirements. So I think these are small little things which are empathy driven.
Absolutely.
And therefore I think if you want those capabilities, if you don't have in-house, if you want it quicker, look for partners who can come and join your journey.
Naya, your views on empathy and of course also the fact that will M&A, do you think that is the route forward to grow quicker as far as global expansion is concerned?
So, if you think about a global expansion strategy, I think one is, of course, is inevitable. I mean, I think as entrepreneurs, I think we start with the ambition of being in global markets earlier rather than later, especially the consumer company, because if you look at consumer multiples, a lot of it is driven by the presence that the larger FMCG companies listed on Indian bourses actually have with exposure to international markets, right? So it's a given. I think there are three pieces to this when you make a strategic decision on going global, though. One is, of course, and that's classic product market fit, right, in that sense. So one is, I mean, how deep is the category that you are solid in that particular market? I'll give you an example. In the UAE, SPF is actually as big as hair care. So when you're thinking about the UAE markets, you're basically saying, okay, what category do I launch with, and do I have a right to win in that category? The second thing, of course, you look at is what is your right to win with the existing audience, right? Because, there's a big diaspora impact that happens in the UAE markets. I think the other right to win, for instance, what we see in Nepal, etc., is a very strong influencer, digital media-led purchase and consideration decision, which is where we know we have a right to win, given our sort of expertise in content, commerce, communities, and influencers, right? The third thing is, of course, then deep localization, right? And in that localization, if we then look at this third piece and we say, okay, in creating our products, right, if the localization cost is going to be exorbitant, or it's not going to make unit economics, as was mentioned out earlier, or it's not going to make sense at scale as well, that's when we think about an M&A strategy and think about, okay, at what point in that localization? Is it with respect to the supply chain, respect to the partners, respect to the digital platforms, respect to the brand? At what point do you need to make an acquisition, or what point is it an evolution of the existing brand?
So picking up from what Naya is just saying, and Souvik, this question is for you. Do you also believe that there is a right time, right market, and an entry mode when it comes to global expansion? How have you gone about, at Inframarket?
So we firmly believe that there has to be two eventual, your India balance sheet or your core business has to start making money before you start going global, right?
Very, very valid point there. Yeah.
So you have to feed business, global business from eventual profits you're making in India, and you have to eventually, and that's not only true for India, even if you look at micro market within India, if you're starting out of west of India, certain part of your business has to make money before you sort of expand into other geographical regions. We have always believed in making money. Equity capital is great as a risk capital, but eventually if your business doesn't make money, then any black swan event will eventually take you out. And I think for us, critical part is before we went global, we had to ensure that the India business continues to grow and continues to be profitable.
All right. Amit, you threw some light on cybersecurity and data fraud and all of that. But I also want to understand that, how important is it for SMEs who are looking at expanding globally to comply with regulatory compliances, filling KYC, adherence to regulations, preventing online frauds, especially when you're venturing in global markets?
Yeah. So one of the things, if you look at the last budget, right? It introduced the concept, it's expanding the concept of DigiLocker to create an entity DigiLocker. And the whole purpose of entity DigiLocker is to smoothen the KYC process. So just like DigiLocker operates for all of us individually, as individuals, where all the documents could be stored, the same would work for MSMEs also. Now that's a great initiative because you have all the key credentials of the entity in one single place. That could be leveraged by a bank or financial institution, whatever, to ascertain the MSME. So which is one. The second initiative, which is getting rolled out and which is again very unique when you look across countries, is the account aggregator framework. And the account aggregator framework will enable, and GST is getting integrated into that, particularly for MSMEs, because sometimes data is a little opaque when it comes to MSMEs, right? So the account aggregator will bring a certain amount of transparency as far as lenders or financial institutions are concerned, And I believe those are critical steps, to safeguard an MSME, particularly when it comes to compliance, KYC, or for that matter from a credit perspective. So I think that's one part. The second part I already did speak.
Yeah.
I think as far as you get onto the digital bandwagon, it brings a certain amount of risk. And unless one is careful about those risks, cyber is one of those, it could at times be risky. That's all.
Yeah, speaking about risk and challenges, my next question is for Naya, but Souvik and Shivas, please feel free to join in. How can SMEs deal with challenges like legal requirements, currency risk, unfamiliar culture, especially when they're going global?
I mean, the simplest answer, and I think honestly the most effective answer, is to have local expertise on the ground. So what we have done is we set up an office, for instance, in the UAE expansion in Dubai, which is led by someone who has tremendous, like 20 years of experience building, consumer and consumer retail companies for the GCC region. Right. The second thing, of course, is building relationships with different partners, including the government. So I think depending on geography to geography, I think those are important stakeholders to keep into account. So just a week and a half back, we were meeting folks from the UAE government, and I think they've literally been extremely progressive in the way they're welcoming companies from India, especially tech and venture-backed companies from India, to set up base with, I think, the entire sort of tax infrastructure. Onto even when you go public, I think the offering is that in the ADEX, is where you list, they'll actually foot 40% of the institutional monies, and then they'll actually run the roadshow for you. So these are the conversations governments are having with ventures like us in terms of setting up office in the GCC, right? And of course, the third partnership you need to have is with your entire infrastructural sort of framework, right? So right from again, like your distributors to your offline retailers, because offline retail is a very significant part, of course, of how we do business in the UAE, onto, of course, your online retailers. But I think the inflection point is coming now where, in the Middle East, for instance, which actually has a significant proportion of SMEs by itself, by the way, about 98% of its businesses are SMEs that drive about 50% plus of value of its gross revenues as a nation, right? So I think now there's a whole digitization influx that's happening, that's being supported, and now we're sort of seeing some of the tools and the infrastructure built out that we're so familiar with in India. Okay. So those are the partnership conversations we're having there as well.
All right. Shivats and Souvik, do you agree with Naya? How did you tackle the whole legal issues, currency risk issues, and of course the unfamiliar culture that there is? And then after this speak, we'll be opening the floor for audience to be ready with your questions.
Yeah, I think, if you look at an SME point of view, I think the main risk that they are going to face is a currency risk. Because the first step you don't take is not to set up operations globally. The first step you're going to take is you're going to have an India operations and you're going to ship globally. And that is the first risk that comes is the perhaps legal risk as a legal standpoint, but most important point of view would be the currency risk. I think that is a critical thing that they need to look at. I think they can work with partner banks. I think we work a lot with obviously HSBC, but I think there are a lot of partner banks in India, good solutions available on how to structure currency risk, and you can work with them. They'll guide you on what your currency risk should be. I think that is the most critical part as a young SME if you're trying to sort of export globally for the first time.
Okay, Shiva?
I couldn't agree more, but I think one of the things that we should also, at least for us, we've been very cautious, is also the culture risk. A lot of the times it's easy to expand into an Asia Pacific, or a GCC has been extremely welcoming. In fact, there are setups where they are willing to invest if you're kind of ready to move your headquarters, right, to Abu Dhabi. But I think when you look beyond some of these easy countries to larger markets, obviously culture makes a big difference, because you can manage currency risk, you can manage legal risks. But I think culture is, because a lot of the times you're still a developing nation, right?
Absolutely, yeah.
So I think we've been very cautious. Number two, I think there are a lot of ecosystem enablers. There are platforms that give you all the advice that you require to set up licenses. And I mean, for example, HSBC has been extremely a great partner for us to immediately get started in every country that we operate. So you have enablers and supporters today, I think.
All right. Yeah. The floor is now open for questions. If you could kindly raise your hand, and if you could get a microphone there. We'll come to you, sir.
Hi. My question is for Mr. Souvik. The building material sector is very, very difficult, very competitive. Ready-mix plasters, wall putties, the retail sector. You've done really well. What are the challenges you faced, sir, in getting this sector?
I won't do it again. That's the challenge. If someone gave me the chance, I won't do it again. But no, obviously, see, I think every sector has its challenges. I think I truly believe as a startup, if you're not tackling a sector that nobody wants to get into, then you're not going to solve a problem, right? So I think the messier the sector, the more difficult it is, the more the opportunities. For us, and as an entrepreneur, I think you have a bias. You always look at the opportunity and never at the risk. And that is what I think that is an optimism bias every entrepreneur needs to have when they step in. But like I said, I think every sector has its issues, and if the sector doesn't have issues, it's not difficult, it's not going to... We tackle the problem differently. We didn't go manufacturing, we went supply chain solutions first. Yeah. Today we are sort of going backward, integrating and going into some manufacturing. We tackle it differently. Today we are category leaders in some of the categories. But what can I say? I think it's about, eventually, it's messy, but that's what gives you the profit pool.
Okay.
Yeah.
Thank you.
Can we
so
get
much.
the microphone to this gentleman in the front? Thank you, sir.
This is Pramod Khandelwal from Voxco Pigments. Ma'am, Amit, I would like to ask you one thing, that in the chemical industry, previously it was been controlled by Europe and USA, then after it moved to China and Japan, then after right now it is China and India. But the regulatory concerns were there, lot larger in China, and same would be there in few years in India also. So how you think India would want to compete with China in next few years?
No, I think that's a great question, and I'll invite my panelists also to respond. But I think one aspect we need to be very careful is, and we see this globally very prevalent, and probably we as a country are a little behind on that. That's my view. Maybe I'm wrong. Ease of business, digital footprint, I think we've taken giant steps, is around the ESG part of it, when it comes to climate change, when it comes to sustainability. And to answer your questions, a lot of regulations are in that direction. Just to give you some statistics, right? As the value chains move here, if you look at S&P 500, 80% of the companies now report exclusively on the ESG compliance and the initiatives. These are tracked at the board level. And therefore, if you are part of the value chain of any of these companies, it is directly or indirectly going to have implications. Similarly, a lot of capital funds and credit funds are also insisting on compliance. So I think as much as regulations around the chemical side, I think the ESG part is also going to be critical when it specifically comes to the compliance, to the chemical industry, right? And these are things which I think are affecting some of the current basis in our view.
All right. Unfortunately, we'll have to wrap up this Q&A session, but they'll be there to answer your questions, I think, once they're done. We have to move to our next conversation. Thank you so much, Sauvik, Naya, Amit, and Shrivas. Thank you so much. It was wonderful speaking.
Thank you very much.
Thank you.
Thanks everybody.
You can leave them. Ladies and gentlemen, a huge round of applause for our panelists once again, please. Moving on to a special fireside chat on digitizing SMEs with innovative tools and latest solutions, wherein we will dive deeper into how digital transformation can amplify the prospect of providing access to higher customer base, increase operational efficiency and revenue, and enhance customer experience for SMEs. To take the chat forward, I will now request our esteemed guests to join me on stage. Ladies and gentlemen, please put your hands together for Umesh Srivankar, Executive Vice Chairman, Shriram Finance Limited, and Prakash Jaiswal, MD and Country Head Business Banking, HSBC India. Ladies and gentlemen, a huge round of applause for our panel. We've got only two of you here, so... Yeah, so I have with me, two legacy companies who are transitioning their way to digital. So let me throw in a broad question to the both of you, and I'll start with you, Umesh. Tell me, what are the kind of offerings, digital offerings that you're currently doing? Take me through the whole transition process, be it your customers, be it your employees. What kind of digital technologies are you adopting?
Yeah, basically what we have done is we try to digitize most of our activities like processes. Now, be it KYC or data, information from the customer, GST data. See, these are all the simple things which is available. You can pull it or you can ask people to get it. But totally digitizing and giving online where there is absolutely no intervention, that we have done in the two-wheeler financing. That is something which we can do. where a customer can log in and loan is approved. Even the vehicle is delivered at home if required. So to that extent, we have done in that. But in many of the other activities which we are more traditional in doing business, like vehicle financing and all, there we need to go a long way. But yes, most of the activities like vehicle inspection and uploading the value of the vehicle and indicating, giving customer information about the loan approval, all these things are digitized. I think everyone is doing it.
But how seamless or how challenging has it been for you?
See, digital per se, if you ask me, we started this journey around 10 years back. First, by making the customer pay the amount to our individual customer and giving a SMS receipt. We were the first people to give SMS. We just removed all physical papers, physical receipts from the offices. That's around 12 years back. Okay. So we started with that. So it is, people resisted. Our own people resisted, customer resisted, because they wanted something in the paper.
Yeah.
So that takes time.
Yeah, it's taken time, and let me come to Prakash now. Prakash, talk to me about the macro space of digitization. Mr. Khara spoke of that, how important it has become for the strengthening of the SME ecosystem. Tell me, how has it amplified the prospect of operations for SMEs?
See, so I will go a little back. The whole UK Sinha committee in 2019 used the word UPI of lending. I don't think we really understood the dimension or the construct behind it. Then look at the 2022 Parliament Committee, which says you have to move from collateral to information collateral, the whole cash flow based lending, the whole harnessing, and Mr. Khara spoke about it, right? So if you look at the macro space, I think the government of India has a clear vision to really address this through the tech stack. And look at how beautifully the government is working on it. They first digitized identity, right? The whole Aadhaar thing, which led to KYC, verification, fraud management. Then they went to digitize payments, which is the lowest hanging fruit to solve. Then they have built the framework, account aggregator framework, and the OKIN framework for digitization of lending. And now you have the new baby called ONDC, which is digitizing the stack for commerce and logistics. So if you look at the macro one, the clearly stack is built by the government. And what I like about the whole approach of the government, and somebody earlier in this summit said that there is no country in the world which is addressing this as good as us. UPI is our star, right? Yes. It's a star baby. I think what I like about the whole macro approach is government has built the stack, and it's allowing private companies to build use cases on it. Umesh's company is a good example, right? And since private companies are allowed to build use cases over it, the adoption is high, right? So that builds a framework. And if you look at the larger goal of the government, when you talk to anybody in the government and the whole India Stack team, they say the larger game or the goal of the government is inclusion. And that's where SMEs come in. So all the work which is happening is actually to help the underprivileged or people who don't have access to credit. So that's the macro landscape.
Interesting insight, Prakash. You spoke about inclusion. Umesh, what about you? Have you kind of brought in inclusion at Shriram Finance?
You mean inclusion in the sense?
He just spoke about how it's reaching everybody to the last mile. So how have you enabled with your employees? You've had certain policies, I think, at Shriram Finance, where, you're enabling, I think salaries are given to women and not to the men, kind of helping their families.
If you look at the entire, our business model itself, we have been always lending to the customers who are not part of the formal ecosystem.
Okay.
And that has been the DNA of Shriram. And we never hesitated, even after 40 years, if you look at, we have always been trying to onboard new customers who are new to the credit, what you call as NTC now. See, many of the companies, as they mature, as they grow big, they would like to go up the value chain.
Yeah.
and do not wish to be in the risky, so-called risky segment. But as a DNA, we always believe in this because you create more formalization among the customers at the bottom, then automatically your customer base becomes larger. You'll be able to address the larger customer base and also go to new geographies. Otherwise, you'll never go to new geographies. Nobody would like to go to Meghalaya, Arunachal, or maybe even many people even not dare to go to Bihar till 10 years back. So these things you need to take the steps forward, and some risk mitigation tools we need to have to get into the new segments.
All right, okay. You know, one very important thing I want to discuss with you, Umesh, is how is digital lending going to make a difference to NBFCs and the borrowers, which are SMEs? How do you see the whole concept of digital lending shaping up in India?
So if you look at broadly, you have the NBFCs, which are there for quite a long time. They have been practicing a lending against buying of an asset or a specialization in particular industry. For example, now asset acquisition is something which everybody understands, either vehicle, machinery, or maybe gold, where you loan against the gold. But if you look at, there are some NBFCs which specialized in textile industry for that matter. If you look at the textile industry flourished in Tamil Nadu, especially Tirupur, Salem, and Karur. There are a lot of local lenders who specialize in lending. Yeah. And textile is not simple. It has a ginning, spinning, weaving, knitting, processing, then garment. And each of this industry, there were specialized lenders. And they played a very important role. So that is going to remain to some extent. But digital players, if you look at last 1 decade, the new digital players, the NBFC who focused on GST return and few variables they have taken. The GST returns, a bank statement, and UPI transactions. Based on that, they created a platform to lend based on the turnover. That's a very few variables to lend, and there is a limitation. You may lend maybe a small amount to them, then test it, then again lend it. Yeah. So it is not a largely scalable model unless they develop a new variables to lend and understand each of these businesses.
Correct.
Because businesses are so varied. So all these varied businesses need to be understood. So for example, if you look at the UP government, they said 74 districts, I will specialize each district as a one particular industry focus. Yeah. So that means there are so many industries in India, you need to build so much of specialization, knowledge, database, then you'll be able to really scale it up. Either you be regional, niche, or if you want to be all India, then you need to study and build a sufficient database to understand the business and lend. So the scalability is the question in the both.
Absolutely. One wonderful insights there. Prakash, coming back to you, what I want to know from you is that, how has HSBC utilized digital processes as one of its key strategies to connect with the customer?
So I'm going to borrow a few things Umesh said. See, what's the biggest problem for a bank? When you offer products and services to the company, because you're a regulated industry, there are a lot of internal processes happen, right? If you want a bank guarantee, or if you need a loan, there are 5 departments working behind the scene, right? That's how banking is, and it will remain like that. So I would say the first job technology and digital does to banking, and we are going through that journey, is reduce the internal friction, right? You call it STP, we call it automation, we call it streamlining, we call it real time, but the job starts with reducing the internal friction. It enables you to serve the customer better or faster. So that's the first one. The second one is the whole digital ecosystem, the tools, the technology allows you to do a lot more with data, right? Did we not speak about SMEs being not transparent, 2 sets of balance sheet, don't know whether the promoter has taken a note and defaulted on it, is he paying to the suppliers in time? we used to ask as relationship managers, I remember we used to ask for DNP reports, which used to take 3 weeks to come to figure out whether you're paying your suppliers in time or not. Today, and we are an international bank and we do a lot of work to kind of explain the India story to the people outside India. We are a data-rich country. In fact, somebody said in the earlier panel that we are actually the richest country today based on data, right? Yeah. But what do you do with so much of data? You need digital to harness data. So I'm coming to my second point where digital allows you to make use of data. Today, and I will not take Umesh's name, let's say somebody, a protagonist. Let's say if you have taken a personal loan and not paid in time today morning, as a banker today, I can ping the bureau and get to know whether you paid the installment due today morning or not, right? So digital allows you to harness data. What do you do with the data? You can either serve the existing customers well. I wouldn't ask the customer, give me X, Y, Z. I'll say, I already know that you have X, Y, Z. That's one. The second thing data will do, both external and internal, is will allow banks and financiers to design new products. Yeah. There are GST-based loans. How did that product get born? Because you had real-time GST data, right? You have, Umesh's company does a lot of loans at a ground level because you have data. What Bureau did to consumer lending 15 years back, the GST data and the bank statement data and the ITR data is doing for MSME. I mean, you hear Nandan Lenkli saying that it's start of a super wave for MSME lending.
Absolutely,
because of data and digital. So coming back to HSBC, I think we're exactly doing what we should do. We are using data and technology to restack our internal processes so that we can serve customers better, faster, we can improve our risk management, and we are using data and digital to develop new product capabilities for MSME. So, long answer, but yeah.
No, before we get forward with our conversation, I would now like to open the floor for the audience. We had very little time in the previous panel. I would like to give more time to the audience. If you could kindly raise your hands. Yes, can we have a microphone there, please? So if you could stand up and ask, yeah.
Ask us easy questions.
So my name is Naushad, and I'm the founder of the Pan Story. So my question is very simple. The image of the pan, when we think of pan, we think of tobacco, spitting and all. So how to change that image, not just nationally, but also internationally?
I will give you a quick answer. Yeah. Please tell the banker or whoever else who has that perception that 90% of my collections are through UPI. Your image will change. I'm sure that's true, right?
Yeah.
Yeah?
That's true.
Umesh, what would you say?
Thank you.
No. Yeah, obviously, I agree with that. But beyond that, no, pan also has other
medicinal benefits.
Medicinal advantage which you can highlight. But you need to, how to remove the tobacco out of it is very important. Because today, the ESG concern is so much. Moment you say that it is linked to tobacco, then internationally your image can never be improved.
Our concept is 100% tobacco-free and spit-free.
Wow, that's
perfect. Tobacco-free and fully digital.
Yeah, fully digital. We need to make it digital.
So yes. You just have to add fully digital. Prakash has given you that.
And I have bought one sample also for you. Don't worry. I will
thank you.
Thank you.
All right, next question, please. Yeah, if you could stand up. Can you please pass on the microphone? Thank you.
Hi, sir. Actually, everyone is talking about like globalization and big giants and all. But no one is talking about like localization of local SMEs. They are still in trouble. Like they were like, Piyush, we are losing our identity because of the giants and all. If we buy from the Amazon, like we are knowing the Amazon, but we are forgetting about the like local markets and all.
No, I think ONDC is the answer now. ONDC as a platform is trying to encourage the local SMEs to flourish, fund, give the details. See, I think new platforms will come, but the ONDC is the great platform, is which I understand, because in Bangalore they already it is open, and also in a couple of cities. Once it becomes all India, I think that platform will help you, because you need not be in Amazon or Flipkart. It can be as local as possible. So I think that should be one.
If I can add, see, if you look at what government is doing, right? As I said, be it identity, be it bureau, be it lending, payments, commerce, logistics, they have only one goal, which is to help the smaller, the unprivileged, credit hungry. So I think government is very clear about what you are asking. ONDC is one example. You will be on the same footing. I was looking at the Paytm buyer app on ONDC, which I think is in a beta or whatever. It's just gone live. It's amazing. The first trade in ONDC Bangalore was a coriander for 150 rupees, a bunch of coriander, which one of the India Stack guys purchased. So I think the future, India is getting ready for the local micro SMEs. And I think government is doing a brilliant job by using technology to make it equal footing. And all of us, the private enterprise will follow suit because that's the government approach, right? They're building the highway and we will run cars on it. So I don't think you should worry too much.
All right.
But what about the awareness? Like they are still in they were like, when I talked to the 100 plus the local SMEs, they were like, we are losing our totally identity. Like they do not have sufficient resources actually.
No, so you should talk to Shruti. This will come on TV. Tell them to watch it.
See, I completely believe that's the problem, but it's getting better, and it will take time. And platforms like ONDC are the answer, and we are hopeful that it's only going to get better. And you should tell all your friends who are asking you that question.
Okay, no, ma'am. I'm doing the survey and all
Okay. And sure. Thank you so much. Any more questions? If you could,
Hello?
yes, at the back.
Hello?
Sure.
Yeah. This is Shubham Kankres here. I am from third year engineering student, having a patent of Indian patent of automatic bike stand controller. At this stage, I want to know how can we get a finance at this stage? Means I am an innovator, and how can I get finance and
studying, and he's an innovator, and he wants to get finance.
I think, see, as an innovator, you have to get connected to angel investors first. See, the startup, any startups, you need to get funded equity. You can't borrow money. Okay. Moment you borrow money, you can't service it. Okay. So you need to be very clear where you need to get funded for what. So the angel investor in India is a new community. It is not big, but there are sufficient enough people. Yes. And I think this awareness, since you are an engineering student, you should be having. I think we need to look at that.
Yes, sir. Thank you, sir.
Yes. Can we have a microphone at the back? And one in the middle also, please.
Yeah. Hello?
Yeah, go ahead.
My name is Arbad. So you have talked about everything like UPI, ONDC and others. So what's your thought about UHI, how it will change the healthcare sector? UHI.
UHI, I don't have much information about, see, health sector, government is the biggest player because the kind of awareness the government has given on health insurance, that is covering, I think, large population. You are talking about that?
Yeah, UHI, Unified Health Insurance.
I think,
it's same thing, yeah. So I think government is the largest player here, and all the network of the government hospitals is providing that kind of a service to the common man.
Sure.
So,
and we'll keep our questions more pertinent to finance. And so can we get a microphone? I think that gentleman wanted to ask a question. Here, in the middle. Yes, go ahead.
Yes, I just wanted to add on to what the other gentleman just mentioned about raising funds for startups. So I'm a startup founder myself. We're into manufacturing electric vehicle charging systems, and as you mentioned that taking debt is going to be tough because it's going to be tough to service it. Now let's say for a startup that is generating funds and that is looking to expand to exports as well, would HSBC be open to lending if a company, let's say, can service that kind of debt and does not want to dilute equity?
Yeah, so I will answer your question, but I'll give you our thinking about the whole startup space.
Yes, I'm interested to hear this one, yeah.
So if you look at us, we started the whole startup practice 4 years back. First, we picked up few problems, which were the low-hanging fruit, which is digital offerings to startup, which itself helps the startups to grow and scale and reduce the time and the friction I spoke about. We did that for a couple of years. We bank many startups. If you don't bank with us, do bank with us. We do a damn good job. But when we started meeting startups way back in 2019, everybody asked us this question, saying they need financing. And rightly so, Umesh. Everybody needs money, be it VC or debt, but people need capital. This is the first C any person needs, right? So we as an organization, as a team, started doing a lot of work saying how do we solve it? Because the conventional way of lending, which is basically lending your money and my money to a businessman, right? We are a deposit-taking institution. So that doesn't work because you need the third generation, collateral, personal guarantee, profit, cash in the balance sheet and all that. But we did a lot of work to build a framework to look at early stage businesses for financing. If you look up on us, you will find we run a $250 million startup financing fund. We call it fund because it's fancy to do that, but it's actually lending to startups off of our own balance sheet. Obviously, it has criteria. So just have a conversation with one of our. So the answer to your question, it's possible, but obviously it's a very calibrated approach by the bank because this is an untested space. But we have taken that call. And we do that. So do talk to our team.
I'll definitely do that. So that can be without a physical collateral as well?
Yes.
All right. So
thank you so much.
On that positive note, we'll have to wrap up this conversation. We have to, move forward. Thank you, gentlemen, for such an insightful conversation. And I'm sure, the audience enjoyed your answers as well. Many thanks for joining us today. Thank you so much.
Thank you.
Can we get a picture? Yeah, he's coming, I think. Ladies and gentlemen, a huge round of applause for our panelists. Thank you so much. And clap for yourselves as well. You've been a fabulous audience asking some wonderful questions. And now to present us, can you hear me? And now to present us with an insightful closing address on integrating SMEs into global value chains with digitization. And to sum up the summit today, we invite on stage Mr. Hitendra Dave, CEO of HSBC India. Ladies and gentlemen, a huge round of applause for Mr. Dave.
Thank you. I'm aware that I stand between you and dinner and drinks, so I'll try and keep it relatively brief. But I do want to talk a little bit about what SMEs mean for the country as a starting point. I think what things are getting done for SME, maybe summarizing some of the points already made by some of the panelists and by Mr. Khara, and also then wrap up with what HSBC is trying to do to make sure that we play our role in helping the SME sector achieve its potential, do more for the country, do more for themselves, and do more for society. So on that note, starting from the society side, I would just say that I think we all know about this $5 trillion GDP target. I think you would have to be on Mars not to have heard this at least by now many, many times. And then there is a longer-term goal set out by the Prime Minister in terms of 2047, we want to be a developed country, right? Which means the difference between the $5 trillion and the developed country objective really means that the average Indian has to become richer. You can be a $5 trillion economy without the average Indian being middle class, right? So that's the big difference. And that's these two objectives I would link to this seminar, to this partnership between CNBC and HSBC, that I don't think, in my view at least, that either objective is possible unless the SME sector is growing at a faster pace than the broader economy. And we know that the broader economy is growing at, take your pick, 6-7% or so. And the context is very clearly, SME is the much more employment intensive economy, right? I'll give you an example of HSBC, right? We disclosed our numbers. We just had a profit of $1.277 billion, but we hire 4,000 odd people, right? But SMEs put together that make $1.277 billion will hire something like 400, if not 500,000 people or so. And that's the context. You don't, I mean, ideally we want to grow, but it's very clear that if we are to achieve these objectives, then SMEs have to grow. And because that creates employment, that creates income, and that creates consumption, and that creates credit, and that creates a virtuous cycle. I think that is part one. I think the second thing why I think we are very close to the SME as a segment, we want to get very close to the SME segment is because it is very clearly, and you heard from the panelists, it is a very aspirational, you know, it's an aspirational business owner. Everybody here might be a business owner or working for a business owner. It's far more aspirational, quite honestly, than professional companies like ours, right? We tend to be much more concerned about downside than about upside. And the aspirational business owners and aspirational businesses are also discovering international markets at a much faster pace, right? And so apart from employment, the other thing SMEs do and will do more and more of is really make India's much more part of the global trade cycles. And we are a natural trade partner, right? We are the world's largest trade bank. So it's not just a good to do for the country, it's a good to do for our customers and good to do for us. So I think just the first part of my thing was that we are here, we've partnered with CNBC, we are doing all this because we genuinely believe that this is part of the journey to 5 trillion, part of the journey to being a developed economy by 2047, and let's hope that on both counts we come true sooner than the original dates. I think the second thing which you know, I think a lot of it got mentioned, but it is worth highlighting, and I won't repeat the numbers in terms of how many SMEs are there and how much they are already part of the GDP, etc. But I think the amount of work which is being done to make sure that some of these objectives, some of these dreams, some of these aspirations come true is quite dramatic. And when you're running your own business, it might not appear so, but there is a lot of work being done by bankers, by RBI, by the central government, by ministries, even your own associations, etc. And you know, I think this whole Udyan thing got spoken about, but I would really encourage everyone. There are enormous benefits to getting yourself registered on that. Right? It significantly increases flow of credit to you. It significantly lowers the cost of credit to you. Similarly, if you look at what I think got discussed in the panel discussion, many of you might be using DigiLocker. I have to say I converted to DigiLocker just a week back or so, and within a week I'm now one of the biggest proponents of it, just because I avoided the huge queues in the Delhi airport just on this Wednesday morning. But just imagine if the same thing starts happening with NTT DigiLocker, right? I mean, if and when it comes to, and it's not a question of if, it's a question of when, you know, all you have to do is give us a consent and we'll take your, you know, memorandum of articles of association, your board resolutions, whatever it is that goes into that, right? It will make the process of obtaining documents, whether credit or customer due diligence or KYC related, at, you know, real time and zero cost, right? I mean, just imagine once you have those possibilities. Or, you know, GST, I know, I have some friends in business who initially seriously opposed joining GST for reasons we all understand. You know, nobody wants to be, in India, one common thing is, you know, that all of us want to avoid paying taxes if we can. But the reality is people who have joined have subsequently found that even after paying taxes, the business has become so much more larger. And just not GST, right? The fact that they are now enabling GSTN returns with your consent to be downloaded, the fact that GSTN will be part of the account aggregator. I think I would just urge that those of you who are really doing the marvelous job of entrepreneurship, right? I mean, I can't claim that we did much entrepreneurship during, you know, banks and entrepreneurship maybe is a bit of an oxymoron sometimes, but the reality is some of these, you know, there's a GEM marketplace, whether what is being tried in ONDC, what is being tried through account aggregator, GSTN. I think I would really say the best years ahead, the next 5 to 10 years promise to be superb for small and medium enterprises, simply because of the digital data print, the data once we have, some of the infrastructure work in place, banks like us wanting to do a lot more with you. I mean, just for context, credit growth to SMEs is growing at twice the rate of credit growth to large corporates, right? So it is not all talk. There is a lot of stuff happening, right? So that's the second thing I would say, and maybe that's what is keeping the economy's engines going despite some of the distress in rural areas due to inflation and things like that. So, and the third thing I just, want to wrap up is just, I shouldn't be introducing HSBC to you here, but just to contextualize what HSBC wants to do with you, what it can do for you, and what it should be doing for you. One is, for those who are looking to serve customers around the world, I think that you will find very few institutions who are better geared to help you in that journey, right? Because we have businesses in 60, 70 countries. Try doing business in 60, 70 countries with 60, 70 different banks and you'll go mad. You will not be able to spend time on your entrepreneurship. You will be just handling banks and documentation and regulations. So as those of you are looking to expand, you will need an international banking partner, and hopefully me and my team will be able to offer you services that help you grow your business. So you focus on your business and you let us handle the banking part of your business. And the second is obviously on digitization. I think we are committed to be the most digitally savvy bank. For those of you who are already banking with us or are not banking with us, because I know there's both populations here, please do at least go through the demos and the product propositions we have. You will find that our propositions will allow you to focus on the customer, on the market, on the product, while some of your back-end issues, whether it's related to payments of taxes, payroll services, accounting, etc., between us and our partners, you will find that you can do your job and some of your work you can almost outsource to the partners we have or we ourselves. Third is we already work with most of the large global supply chain partners. Right? The biggest companies in the world we are already banking with. We know what their practices are. We know what they like. We know what, we are happy to share those best practices. But irrespective of whether you hear it from us or from any other bank, please try and join these global supply chains. I think I have seen companies that have become part of global supply chains. They made effort, years, months. Once you get in, the kind of technology transfers you get, the kind of focus on quality you get, the kind of focus on consistency you get, you will find even your wildest imagination you can start figuring. Because people who supply to two large corporates, the third corporate is so much more happier to take you in, and you can see it in various segments now. Finally, of course, we are a full service bank, which means your individual accounts are very welcome. In fact, I was just telling someone inside there, I have told my teams we will not extend monies to businesses that don't want to give us some of their personal monies. So please do consider banking with HSBC for beyond your particular business. I thank you all for being here. I know it's been a little crowded at the back, which is good and bad, which is good in the sense that, enough people thought that this was going to be a good use of your time. It's bad because we just couldn't find a bigger hall. Hopefully now the food and the mingling with our teams will help you offset some of the crowded areas that you were standing in. I hope this was a good use of your time. I really found the interactions very helpful. I want to thank CNBC as well for the partnership that we have. And like I said, because this is a subject close to our heart, we are willing to do more and make sure that we play our little role in the growth of the SME segment and the economy. Thank you.
Thank you, sir, for summing up the evening for us and, of course, for elaborating on the fact that how HSBC is providing and will continue to provide unconditional support to SMEs. And with that, it brings us to the end of the summit tonight. We thank all the industry stalwarts who shared their valuable insights and advice at this event and all our guests for joining us. We now request you all to kindly join us for networking and dinner.